Matt.
Guys, Mortgage Matt here from Envoy Mortgage in Bedford, New Hampshire. Working here with Alex LaChance from Regarding Real Estate.
And we're going to talk to you today about down payments and some of the myths regarding down payments.
So Alex and I are teaming up today with this video specifically because we keep running into the same common misunderstanding out there with folks looking to purchase a new home, and it's holding them back because they believe that they need 20% down to buy a home. And see, on my end, I'm the home mortgage lender. I deal with the finances. Alex deals with the real estate side of looking for the home, finding new home buyers' houses and listing and all that stuff. But what I do is I get my clients into homes for the best possible financial situation depending on their overall portfolio. And the 20% down is great with a conventional product because you don't pay the private mortgage insurance. However, for those who have maybe credit challenge issues or just simply can't put down 20%, there are options. And I'll start at the lowest option and go up a little bit. So USDA, which is the Rural Development Loans, those are $0 down, 0% down, but it has to be in the qualified area for USDA eligibility. So that's 0% down in a perfect world, only paying the closing costs and prepaid escrow set up on that. Additionally, your next step up best is conventional product at 3% down of the purchase price. If you do not meet conventional guidelines, we will look to get you qualified into the FHA, and that FHA requires only 3.5% down. And I just want to speak one more minute upon this. 3.5% down with FHA is a good option to get you into your first home. However, private mortgage insurance is paid for the life of the loan with an FHA product. So on my end, what I like to do is after 12 mortgage payments are made on your FHA loan, I like to look into that situation to see if it makes sense to refinance you into that conventional product later down the road so we can eventually eliminate private mortgage insurance for you.
And I always hear people talk about, I just want to wait till I don't have PMI. Well, for most of us, saving 20% down on a house that's waiting a long time.
Yeah.
In that meantime, you're going to lose all that appreciation gain when really you could have just gotten in that house and refied. A lot of times the values go up so that you're at 20% equity.
Exactly.
Year.
Yes, it's very true.
You just did a video the other day I saw, and we're still at what, a 3-something rate of return?
We're in the high, I think it was like 3.97 for a 12-month appreciation on your home values, and that's a great appreciation value. If you look back to the previous year, I want to say it was upwards of 6% over a 12-month span of your home value appreciation, which is just astronomical and just not really in the norm. I mean, that's big numbers, but when we're leveling out the market right now, what we're seeing, the mid to high 3% on the home appreciation value is standard, and it just creates equity in your home year to year.
So in that time you were waiting to save up that 20%, you could already been gaining equity.
The way I look at it is you can either take advantage of the market now and the 5 to 6% rates. They're not 3.5 like they were 3-4 years ago, but 5 to 6% interest rate is still historically very low. When you're paying rent, keep in mind you're paying 100% interest the entire time you're paying rent. You're never paying down any principal and interest. You're paying down the homeowners.
So my bottom line with this conversation that I always tell people is just find out.
Right.
Don't think that you can't get a loan and you can't buy a house. Talk to Matt or any other professional out there and find out if you can do it, and then let's start looking at your price range.
It's as simple as www.mortgage-matt.com. My application takes 7 to 10 minutes to complete, and from there we're going to be able to identify what you qualify to buy a home. If you're not qualified out of the gates, I'm going to take some time to provide you a plan to execute so we can get you eligible down the road.
Awesome.
Remember, we don't need 20% down, guys. 3.5% down is standard, and let's get you home this year.
And 0 for veterans too.
That's right. VA, come out, let's do it. Love to work with you.
All right, thanks, Matt.
Thanks.